Sydney's property values are falling and Newcastle's aren't. I'm Ben Harris from In Financial Services, and here's actually what's happening in the market this August. This month, the Reserve Bank has held the cash rate at 4.35%, following 3 hikes earlier this year. And according to both Cotality and Heron Todd White, cuts are unlikely until well into 2027. So if nothing's likely to change for a while, then the question becomes, when did you last look at your own loan? Lenders are still competing hard for good borrowers, and the rate that you started on isn't always the rate that you should still be on. A quick review could save you real money while we wait for the cycle to turn. Now back to that Sydney and Newcastle story. Those same 2 research houses have just released their latest market reports, and they're both telling the same story about our region. Heron Todd White published what they call the property clock, which tracks where each market sits in its cycle. In their July report, Sydney and Melbourne houses are both sitting in the declining phase, but Newcastle is on the opposite side of the clock. It's in the rising market phase. Cotality's numbers back that up. Their July housing chart pack shows Sydney values fell 3.2% over the June quarter, while regional New South Wales held its ground, up 0.2%. And over the full year, that gap is even clearer. Sydney managed just 3% growth, while regional New South Wales rose 7.8%. Cotality also report that nationally, homes are taking longer to sell. Clearance rates have dropped and vendor discounts are increasing. So even in a growing market like ours, buyers have more breathing room than they've had in years. So how are lenders responding to all of this? Well, AMP Bank have just launched a 40-year investment loan with up to 10 years interest only, which they say is a first for an Australian bank. They've designed it to help investors manage cash flow as the new tax rules reshape the investment landscape from July next year. Now, longer terms and extended interest-only periods aren't right for everyone, but it shows that lenders are getting creative. And it's a good reminder that the market is always evolving. Every situation is different, and the right move depends on your goals. So whether you're buying your first home, reviewing your loan, or thinking about your next investment, reach out to the team and we'll help you work out exactly what this means for you. Thanks for watching, and we'll see you all next month.